we've had different periods along the way where you've had these hopes that different pieces of legislation were going to get through. The most recent was in December of 22. So 4 months ago, if you woke up on the morning of December 5th on a Monday morning after a weekend where the Department of Justice had said, we're good with this, we've reconciled our issues, there was a lot of expectation that year-end lame duck congressional session legislation was going to push cannabis legislation into an omnibus bill like the National Defense Authorization Act, that was the expectation. The industry got so hyped up into believing this was going to happen that you had a 30% rally going into that. And then when that did not take place, and there was an expectation that it was going to take place, and then on top of that, a view that's, wow, looks like coming out of November, that there really isn't this ability to push through in the new Congress legislation, cannabis assets dove into year end. You saw a massive exodus, and really in 2023, it's been even worse. It's been at a time when it's been an extraordinary quarter for global assets, and first quarter of the Nasdaq was up 18%. You'd think, and high multiple tech companies, higher risk companies, companies that are less profitable, frankly, outperform the ones that are the most profitable. That's what happens when you have a risk-on environment. Cannabis was down conservatively 20%, more likely 20 to 30%. And so it's back to your question: how much is this priced in? How much is this a driver for returns? It's unfortunately been the major driver, and I think that that's both wrong, but I think on some level it is important that the industry have access to capital, that the cost of capital comes down at a time when interest rates are going higher, right? So that the industry ultimately gets better treatment on its taxation. So one thing that probably a lot of your audience doesn't spend a lot of time, they don't have to focus on this, but there's something called 280E, which is an IRS or a U.S. Treasury dynamic that says if you're a Schedule I drug in this country, in other words, something that's illegal, of which cannabis is on a federal level classified as a Schedule I, along with cocaine and heroin and things that I would argue this is insane. But the taxation is such that you're taxed anywhere from 60 to 100% on your profits, and that includes also your inability to subtract cost of goods sold from your income statement. So it makes cannabis almost unprofitable universally, but certainly on a retail level. The vertically integrated companies have different classifications that allow them to have some part of their business have more traditional accounting. But I bring all this up because there are different things that are hurting the industry right now. That I think you took a piecemeal approach to legislation, did not have to have blanket federal, legality, that the industry would soar, would absolutely, what is that number? I don't know. Would it double? Would it triple? The answer is yes, at some point. As I know from many years in markets and many years in emerging markets, though, the old expression that says, tell me the headline, I'm not sure I can tell you what the market's going to do with the headline. I feel that way about cannabis, but I am very sure that these are big positives that would be a part of a re-rating moment for the sector. Right now, there's really zero expectation priced into the cannabis industry that you're going to see any legislation, even banking legislation that gives these companies better access to capital. The rescheduling tax issue is the one that I actually think there's more likelihood for, and I think that would be massive. But again, is that priced into the market? Absolutely not.